So we know by now BlackRock is all in on Bitcoin. They're launching a spot ETF, own a ton of Bitcoin, and are even large shareholders in mining stock. But there is one niche they have loved from the very beginning. BlackRock and Bitcoin. A brief overview. Now to begin, BlackRock, the financial titan, has always had a fascinating relationship with Bitcoin. At first, while many traditional investment firms were skeptical, BlackRock showed a complete disdain of Bitcoin, the king of cryptocurrencies. They viewed Bitcoin and crypto as a way to elicit illegal activities. As we know now, however, BlackRock recognizes Bitcoin's potential as a store of value, likening it to digital gold. But here's where it gets intriguing. Larry Fink, the visionary behind BlackRock, seems to be looking beyond just Bitcoin. While Bitcoin has its allure, Fink's attention is captivated by something even more transformative: tokenization. It's not just about a single cryptocurrency for him. It's about the broader potential of blockchain technology to redefine asset management. So, while the world is still buzzing about Bitcoin, Fink and BlackRock have been setting their sights on the next big wave in the crypto ocean, the world of tokenized assets. And trust us, this wave is going to be monumental. The truth about tokenization. Tokenization is more than just a buzzword in the crypto space. It's a revolutionary concept that's poised to redefine the way we view assets and investments. Let's dive deep into the truth about tokenization and uncover the massive opportunities and challenges it presents. 1. A big opportunity. At its core, tokenization is about converting the value of an asset, be it real estate, art, or even a company's equity, into a digital token on a blockchain. This process is transformative for several reasons. Decentralization and trust. One of the most compelling aspects of tokenization is its ability to decentralize assets. By breaking down assets into tokens on a blockchain, we're essentially removing the need for centralized authorities or intermediaries. This means that transactions can occur directly between parties, fostering a new level of trust. Remember the essence of Bitcoin, as envisioned by Satoshi Nakamoto? It was all about creating a decentralized currency, free from the control of central banks. Tokenization takes this vision and applies it to a broader range of assets. Enter smart contracts, the unsung heroes of the blockchain world. These self-executing contracts have terms of agreement directly written into code, ensuring that all parties adhere to the stipulated conditions. In the realm of tokenization, smart contracts can automate processes, reduce fraud, and ensure that transactions are transparent and tamper-proof. Imagine buying a piece of real estate where the ownership transfer, payment, and all other processes are automated and secured by a smart contract. The efficiency and security are unparalleled. Avoiding another 2008. The 2008 recession was a wake-up call for many. It exposed the vulnerabilities in our financial systems and the dangers of opaque and risky financial instruments. Tokenization, with its transparency and traceability, offers a potential solution. By tokenizing assets, we can have a clear view of who owns what, reducing the chances of systemic failures. It's a more transparent, more accountable financial system. A sea of financial opportunities. Lastly, let's talk money. The tokenization of assets opens up markets like never before. Assets that were previously illiquid, like real estate or art, can now be traded with ease. This liquidity can unlock trillions of dollars in value. For investors, this means more opportunities and the chance to diversify portfolios like never before. For businesses, it's an opportunity to raise capital in innovative ways. The financial landscape is on the brink of a major shift, and tokenization is at its heart. 2. The risks. When tokenization goes wrong. While the promise of tokenization is undeniably exciting, it's crucial to approach this new frontier with a healthy dose of caution. Just as every coin has two sides, tokenization, too, comes with its set of challenges and potential pitfalls. Let's delve into some of the risks that lurk in the shadows of this transformative process. The ICO boom parallel. Remember the ICO, initial coin offering, frenzy a few years back? It was hailed as the next big thing, a revolutionary way for startups to raise capital. And while many legitimate projects thrived, the ICO space also became a breeding ground for scams and dubious projects. The lack of regulation and oversight meant that many investors lost money on projects that either failed to deliver or were outright scams. Tokenization, if not approached correctly, could tread a similar path. The allure of quick profits could lead to a flood of tokenized assets without proper vetting or due diligence. Scams and bad players. Just as with ICOs, the tokenization space could attract its share of bad actors. Scammers could tokenize non-existent or overvalued assets, misleading investors. Without proper checks and balances, the tokenization market could become a minefield for unsuspecting investors. Technological and infrastructural concerns. Tokenizing assets is not just about creating digital tokens. It requires a robust technological infrastructure to ensure that tokens accurately represent assets, are secure, and are easily tradable. Early-stage hiccups, technological glitches, or security breaches could undermine confidence in tokenized assets. Efficiency or lack thereof. One of the selling points of tokenization is its potential to make markets more efficient. However, without proper standards and interoperability, we could end up with a fragmented ecosystem where tokens from one platform are incompatible with another, leading to inefficiencies. In essence, while tokenization holds immense promise, it's essential to tread carefully. As with any emerging technology, the initial euphoria must be tempered with caution and due diligence. The road to tokenization is paved with both opportunities and challenges, and as informed investors, it's our responsibility to navigate it wisely. 3. Major players gearing up. Tokenization isn't just a buzzword thrown around in crypto circles. It's rapidly becoming a focal point for some of the world's most prominent financial institutions. But before we dive into that, let's draw a parallel to help us understand its magnitude. Tokenization versus traditional finance. Think about the stock market. When a company goes public, it breaks down its value into shares, which investors can buy, sell, or hold. Tokenization in many ways mirrors this concept. Instead of shares, assets are broken down into tokens. These tokens can represent anything from real estate to artwork. The beauty of it brings liquidity to traditionally illiquid markets. Imagine being able to buy a fraction of a Picasso painting or a landmark building. That's the power of tokenization. Now, when such a transformative idea emerges, it's only natural for the big players to take notice. And that's precisely what's happening. The financial titans are paying attention. J.P. Morgan, a name synonymous with global finance, has been actively exploring the world of tokenization. Their interest underscores the potential they see in breaking down assets into tradable tokens. BlackRock, the world's largest asset manager, isn't far behind. With Larry Fink expressing interest in tokenization over Bitcoin, it's clear where they believe the future lies. And let's not forget Goldman Sachs, another behemoth in the finance world, keeping a close eye on the tokenization wave. These institutions diving into the tokenization pool isn't just a trend. It's a testament to the transformative potential of tokenizing assets. When the big players move, they do so with caution, research, and foresight. Their interest in tokenization is a clear signal to the rest of the market about the direction we're headed. In a nutshell, the future of finance is evolving, and tokenization is at its forefront. With major institutions on board, we're set for a fascinating journey ahead. Spotlight on tokenization coins. Tokenization is more than just a concept. It's a rapidly growing sector within the crypto world, with specific coins leading the charge. Today, we're going to shine a spotlight on one of the frontrunners in this space, Polymath. But first, just remember this is not investment advice. This video is for entertainment purposes, and you must do your own research. Polymath. Polymath isn't just another name in the vast sea of cryptocurrencies. It stands out, and for good reason. Polymath is a decentralized platform designed to facilitate the primary issuance and secondary trading of blockchain security tokens. In simpler terms, it's aiming to bring the multi-trillion-dollar financial securities market onto the blockchain. That's no small feat. One of Polymath's standout features is its emphasis on regulatory compliance. In the wild west of crypto, where regulations can be a minefield, Polymath ensures that every token created on its platform complies with the necessary legal requirements. This focus on regulation is a game-changer, making it easier for businesses to tokenize their assets without fearing legal repercussions. With the growing interest in tokenization, platforms like Polymath that prioritize security and compliance are poised to thrive. As more assets get tokenized, the demand for platforms that can facilitate this process seamlessly and legally will undoubtedly rise. Polymath, with its forward-thinking approach, is well-positioned to capitalize on this trend. In essence, Polymath is not just a token. It's a vision of a tokenized future, where assets of all kinds can be traded as easily as buying a coffee. And with its unique features and strong market potential, it's a coin that deserves every bit of attention it's getting. Tokensoft. Next up on our tokenization radar is Tokensoft. Now, if Polymath is the flashy superstar of the tokenization world, think of Tokensoft as the unsung hero working diligently behind the scenes. Tokensoft operates with a mission to bring institutional-grade compliance tools to blockchain assets, making it a pivotal player in the tokenization sector. It's not just about creating tokens. It's about ensuring these tokens meet the highest standards of compliance, security, and scalability. What sets Tokensoft apart? For starters, its platform offers a suite of tools designed for both primary issuance and ongoing management of security tokens. This includes everything from investor onboarding to dividend distributions. Moreover, Tokensoft's emphasis on international compliance ensures that tokens can be traded across borders without a hitch. In the bustling world of tokenization, Tokensoft is carving out a niche for itself by prioritizing compliance and broadening the horizons for global token trading. It's a testament to the fact that in the crypto world, innovation and regulation can, indeed, go hand in hand. Other notable tokenization coins. Now, while Polymath and Tokensoft might be grabbing the headlines, the tokenization sector is brimming with other noteworthy players that deserve a shout-out. Securitize. First up, we have Securitize, a platform that's making waves with its digital securities protocol. This ensures that tokens issued on its platform are compliant across their entire lifecycle, from creation to trading. Harbor. Then there's Harbor, which is all about reimagining private securities through blockchain. Their R token, or regulatory token, is designed to ensure compliance at every transaction, making sure every trade is above board. Swarm. Last but not least, let's talk about Swarm. Swarm is all about democratizing finance. Their platform allows for real-world assets to be tokenized, bringing opportunities previously reserved for the elite right to the fingertips of everyday investors. These are just a few of the many exciting projects in the tokenization space. Each one is bringing its unique flavor and innovation, pushing the boundaries of what's possible in the world of decentralized finance. So, while Bitcoin and Ethereum might be the talk of the town, remember, there's a whole world of tokenization out there waiting to be explored. Alright, folks, let's wrap this up. Tokenization isn't just another buzzword in the crypto space. It's a transformative force that's reshaping how we think about assets, ownership, and investment. For real estate to art, the potential to tokenize real-world assets is vast, and the implications are profound. Now, when someone like Larry Fink, the head honcho of BlackRock, leans more towards tokenization than Bitcoin, you know there's something special brewing. It's a testament to the potential and promise that tokenization holds in the ever-evolving world of finance. But, as with all things crypto, it's essential to tread with caution. While the horizon looks promising, remember to do your homework. Dive deep, research, and understand the nuances of tokenization and the projects leading the charge. The crypto landscape is vast and ever-changing, and tokenization is just one of the many exciting chapters in this saga. So stay curious, stay informed, and most importantly, stay ahead of the curve. Subscribe to the channel and turn on the notification bell for more quality crypto content.